All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time, here on the YouTube channel. If you haven't already, make sure to hit that like button, subscribe to our channel, turn on notifications so you don't miss anything. It is Tuesday, August 15th, 2023. All right, let's go ahead and get started. Made things a little easier this time. So when I first wake up in the morning, first thing I do is I open, all my stuff in terms of Market Watch, Bloomberg, Twitter, Wall Street Journal, CNBC, all of it. So I start skimming through the news in the morning. And what I do is really just try to copy and paste as much as I can of this info to you guys first thing in the morning. And that's what we do on the blog pretty much every morning. So again, a lot of the stuff that we're watching, investing.com. And then what's easy about this is that I can go over some of this stuff that I've already posted that needs a little more explanation here on the YouTube channel. So that's always nice. So we started with, let's go ahead and get started with the market. We'll go around the horn and see how we do. So real quick view of the charts right now. Again, really just chop. I know we're pulling back here on the future side. Dow down 270 points. Most of that is banks. And the reason that is because there is a downgrade watch on the banks. Not even an official downgrade, just a downgrade watch. It's a Fitch. Fitch warns it may be forced to downgrade dozens of banks, including like JPM and all these big guys. So let's go rather quickly. Let me see if I can find exactly what I'm looking for. Let's find the S&P 500 heat map here. And this is the pre-market heat map. I'm going to go ahead and refresh it. This is all the S&P 500 companies. The sizing is based on their market cap. So keep that in mind. So you can see here the bright red is banks and energy. So let's go and start with banks. The Fitch downgrade. It's not even a downgrade. It was just a warning, a watch. You didn't even get a ticket when you got speeding. That just shows how really sensitive the market is right now. And I don't believe it's sensitivity. It's illiquidity. There's not a lot of liquidity out there. Not a lot of reasons to buy, obviously, other than NVIDIA, which is the only thing that's green at this very moment. And the reason that is because the UAE and Saudi Arabia is loading up on NVIDIA chips. That creates more upgrades. NVIDIA, I mean, what more can we say that we haven't said already? We know that semiconductors are the oil of the new century. And I think that's pretty poetic that Saudi Arabia and the UAE is adding semiconductors from NVIDIA to push higher, push a little more into their artificial intelligence, I guess, plans or goals. So in regards to the Fitch, not even downgrade, not even a Fitch downgrade, Fitch watch, that cost JPM 1.65%, Bank of America down 1.7%, Wells Fargo down 1.5%, even Berkshire is down 0.60%, Citibank down 1.54%. In terms of energy, as we can see here, energy is down 1.13%, 81.58. What happened yesterday that caused this? Well, this is what happened. We had some China news. So let me see if I can get that. Here you go. Industrial production in China increased 3.7% in July from the earlier period, missing expectations. Retail sales also grew less than expected on a year earlier period. Meanwhile, the People's Bank of China lowered rates by 15 basis points to 2.5%. However, the rate cut failed to soothe investor concerns and instead raised more worry about emergency property crisis in China. So that's the issue with China there. Those headlines show that there's lessening demand overseas. What's going to get hit? Commodities are going to get hit. So you can see crude oil is down. I guess gasoline being up is a little bit different. Gold is down, but again, that's not really China-based. That's more the dollar. And again, that's pretty much just technical right now, the way I see it. I did see some unusual options activity on some gold calls for October. I posted that on social media as well. Silver down 0.85%, copper down 1%. Again, that's more of a China thing as well. So those kind of headlines in regards to demand overseas, that's going to hit commodities, that hit energy. The good news is that at least on my XOM position, nothing has really broken. Euro dollar, I am short euro dollar, 109.28. Now I'm down in the position, but nothing has broken, still more downside to be expected. So let's go ahead and close that out. I'm going to go ahead and expand this as we get started on our day. Pound dollar, 127.26, up about 26 pips in Forex land, 145.49 on the dollar again, pretty stable. Bitcoin, even in a risk-off sentiment, I guess today, 29,410. Dollar being down does help. 1846 on Ethereum futures, that is up marginally. As you can see, the Dow being the biggest loser today, that's because of the concentration with energy and banks. Again, in that index, it's way a little different. Same thing with the Russell. Russell is small caps. That has more bank and energy exposure, a little more value, but aggressive value, let's call it. But tech kind of holding firm. Really, most of that's NVIDIA on that upgrade by multiple banks. I posted that on the blog as well. So let's go and take a look at S&P 500 futures. What has changed? Has this move really changed anything in terms of this Fitch warning of banks or what have you? No, guess where we are, right above the 50-day. So nothing really to report there. Nothing you really need to do. I do have a possible long. I have a target for a long. I'll go there here in a second. And here you can see that green line that we set up there. That was the previous breakout point, or the previous start of the breakout point for that leg higher was in early July. We bounced around that zone. We're still above 15,000. Again, nothing to really report until we get above 15,350. That clears the 50-day MA. The dog days of August continue. Remember, yesterday the market was higher. The market's down this morning. Let's see if that changes. I'm looking for 45.20 on S&P 500 futures. Why am I looking for that? That's the 201 hour MA for a possible scalp from 45.20 to 45.50 being my first TP. But again, we didn't break it. It was a target alert set. I did not fill that trade. So again, it just pulled back. We're testing that support level right around 44.70 for the time being. And again, it's just chop, guys. Very, very difficult to trade. I did catch AMD yesterday with the team. It is now in the money, those 112s if you held. I got out for 33%. I was just happy to catch it since the market has been very difficult to trade recently with this chop. So NVIDIA really helping AMD, obviously. NVIDIA being very expensive in terms of options. We chose AMD, the cheaper cousin of NVIDIA. 113.41, if that breaks, we're going to look for some calls up to this yellow line here about 116. That is exactly the range that we want. That was that, about a month ago, that was that leg down that we had, and then we kind of held that resistance for a bit, but still rather choppy. But I think we can squeeze one more trade out of AMD if we break 113.41 this morning. Let's go to XOM. I still have it. And again, has anything really changed? I think as long as you hold above the 100-day, again, time is always a factor, and we held this from last week. And again, guys, it's just this right here is what we're working at with. We got above 112 yesterday. We pulled back on this, crude oil stuff in terms of China, that headline. Not much you can do there. We never even broke 85. We got very, very close on the 10th. Could this be that resistance that we're looking for? Really, until we break down below the 20-day at 80.62, nothing has really changed for crude oil. Looks like we may have hit a little bit of a supply area, if you want to call that supply and demand zone. Again, that's just a fancy word for me for resistance, and that's pretty much where we are currently. Let's go and take a look at DraftKings. I went ahead and opened that as well, and we're going to go bring up the hourly trading at 29.15. Kind of just choppy in this range. We know DraftKings is a high beta. Nothing has really changed. The target is 30.14. We had some nice volume on that setup. Probably just expecting more chop today. As you can see, we're bouncing a little bit on equity futures on a pretty good retail sales number. So actually a very good retail sales number with June being revised higher. So before we get to that, let's go ahead and answer some questions this morning. Yeah, we talked about Fitch. That's right. I mean, what more can we say? What do I think about Roblox at the 31 area? Roblox. Let's see. We're looking for 33.70 for a break. If we do get that, we're looking for this gap fill at 37.08. Until then, that's what you're waiting for. Let's see here. Thoughts on Target as a shareholder before earnings tomorrow, before market open. I went ahead and talked about that a couple of days ago, or I want to say, yeah, it was last week. I just don't know the exact day. And again, this is a crossroads for Target. And Target being marginally higher, even with solid retail sales, that's kind of a bummer, obviously. But 125.08, that's the actual wick low. If we break below 120, I think that's where it's going to be tough on Target. And then that's where I think it gets to the point of being so cheap that you're really just playing it for any kind of hedge fund acquisition at that point. Because if you break below those levels, 120 or so, 100 to around 91, is the next support, and that's the 2020. Let me see if this is the 2021 lows. This is 2020. Yep, the 2020 lows, the COVID lows. Talk about top to bottom. Now, would I buy at the COVID lows? Absolutely. Absolutely. Again, unless we see earnings absolutely collapse, which I don't expect. Again, we just have to wait and see what that CEO is going to say about any kind of forward guidance or what's to be expected from the name. It's going to be, to me, the most important of all the earnings this week, in my opinion. Fitch warning good for Mara and BTC today. Well, Bitcoin is not exactly up this morning. It's pretty much flat. Let's take a look here at Mara. Not much to do here. Yeah, you're kind of just bouncing off the 50-day right now. If you got above 1559, you could target the 20. So let's place an alert there at 1565. And that'll be my target just for the alert. I would prefer to get above the 20 to see a change in trend, at least on this 20-day basis. But we are not there yet. We need a little more. Let's see Tesla. Tesla had some new models that were cut in price. Not the best for shareholders, at least short term. So it looks like Tesla is really just working on what? Market acquisition. They're looking for, market share, which is completely fine. Tesla, to me, is still the leader in EV. We filled this gap at 235.13. The good news is that there's no other gaps below unless we absolutely melt down to 146.78, which I don't foresee coming. So what does that mean for the name? What I do see is seeing that we're starting to get a little tighter on this downside. As long as it stays tight and before, let's say a $10 range or an $8 range or so, you could see it here. Actually, this was like a $4 range. Pretty tight in terms of price action. We could be setting up for a possible move higher. And that is interesting, to say the least, because that would actually be technically perfect with filling this gap and then just bouncing, just a retest and bounce. So what would be compelling enough to say, you know what, we got out of the worst of it? Around 260. Again, that's the 20-day. You also have the 50-day moving average starting to possibly break above the 20, but we don't want that. We still want short-term moving averages to be higher than long-term ones. Let's see here. So again, I like Tesla if we can show me a little more, get above 250, and we can talk about it. But right now, I think it's not worth the shot to touch. Just not here. And again, you'd have to break below 235.13 to play downside. And then 219.19 would be very compelling for buyers. Thoughts on play? This is what, Dave & Buster's? On the daily, not much there. On the hourly, you have a gap to fill here at 43.99, but I wouldn't touch it, to be honest. It's still downside move. And it's choppy on the daily. So I would ignore, I wouldn't touch it at all, actually. NVDI. I don't know, maybe he's talking about NVIDIA? James asking about NVIDIA. Let's see it. And again, we talked about NVIDIA. We talked about the semis yesterday. We played AMD. Need to get above 450. 450 is a 20-day moving average. So let's go and place that alert. We're not there yet. I think we're at what, 446? If we can get above 450, we can start targeting 475. It'll be tough sledding because you got a trend line here right at 460 that was broken. If you remember, we talked about UNH. When a trend line is broken, it really doesn't mean too much. It doesn't mean disaster. And you could see here, even on a weekly chart, very clean trend line, and then broke down, and it still bounced. So it's not, a trend line break is the end of the world for NVIDIA. As you can see, demand is still strong for the name, even in a red tape. At least futures-wise, get above 450, we can talk about 475, and that's going to elevate all the semiconductors as well. What do you think about all these new option ETFs like Tesla and Apple that pays in the dividend percentages every month? Those are like the call writing ETFs. Do your research, see if that works out for you. Try it out. That's the best thing. I have never used those ETFs personally, but again, everyone's risk profile is different. I would do my research before I put any capital in, obviously. I like a little more control personally, but if that's something that you'd want to do try it out. See if there's any kind of reviews on it, maybe some background information. I have not looked at it, but compelling. There's other derivative instruments out there. It's not just trading. There's different things that you can use to make extra income other than just buy and hold. Google and Microsoft. Let's see it. Google, we need 135 to break. Then we have a gap to fill at 140. That's where it gets nice. Let's take a look at the hourly. Just chopping around. That's all it is. Just staying around here chopping. Not much to do there until we get above 134. I'm sorry. Microsoft. Nice downward trend. Kind of broke to the side of it. Let's see if there's anything that's really broken. Nope. Didn't even fill that gap yet. I would have felt a lot better about Microsoft if we did. We didn't even tag the 100-day. So could it be a play here where we want to go long or buy the dip here? Not on the hourly, not until you get above 340.72. That's what I would wait for. Just tough sledding, not a lot to really do. You really have to go digging for some names that have at least some relative value or at least a higher probability to move in the direction that you want. As you can see, you're just chopping, and that's really the pain in the butt part, is kind of finding what we can do. XOM, obviously I have DraftKings, but AMD I'm watching very closely. The problem with NVIDIA is that it's very expensive. When I was looking at it, I think I was looking at the 435s or so. They were like $5.80. And I can't send that, because if I send that to you guys, some people may not do the risk profile correctly. For all I know, that's all they have in their account. And then that's one trade for everything, for all the marbles. And for all I know, that could be someone's rent money. And I don't want to do that to somebody. So, there's obviously a level where I look for in terms of sending out signals that actually make it, where you have some control in terms of, how many contracts you can buy. I don't want to say the saying cheaper the better, because that's not usually the best case scenario, since now most, if not all, brokerage charges commission. Robinhood too. It's not their commission fees. It's from the CFTC, I believe, or the Options Enforcement of the United States, something along those lines. I don't know the acronym, but yeah, you're kind of losing edge there if you're just using Robinhood. To be honest, the idea was that you use it because it's free, but not anymore. But in that saying, we don't want to send anything that's too expensive. I remember about 4 years ago where Amazon was trading $2,500 a share before the stock split. And those options were insanely priced. You're talking about $12, $14, $16. GME had that time as well. So we have to be careful. That's why we have to use our knowledge to see that, okay, if NVIDIA is going higher, what's going to move higher in sympathy? We know that sectors tend to move together. We looked at AMD, the technicals were there, and we caught it. So that's a really good thing. We kind of have to think outside of the box sometimes. Kind of got to get away from what doesn't work for us and find a solution that does. So we'll see what we get today. Every day is a new day. Have a great rest of your morning, guys. I will see you tomorrow for the next morning note, and have a great Tuesday. Cheers.